Hey guys, welcome back to a brand new video. I'm RexFinance, and I'm sure you are all aware, but Jerome Powell, J. Powell, the federal chairman, whatever you want to call him, crashed the markets on Friday. All of our portfolios were feeling lots and lots of pain because the NASDAQ finished the day down 4.1%. The S&P 500 was close, finishing the day down 3.4%, and small caps finished the day down 3.3%. So no matter what equities you owned on Friday, your portfolio was in pain. And this is of particular interest to my YouTube channel because last week I came out explicitly and said that I thought the market rally would return last week. And well, obviously that ended up being wrong because on Friday we sold off quite significantly. But in this video I broke down two different catalysts that I felt would propel the markets back into their rally. The first of those catalysts was NVIDIA earnings. I felt that most of the bad news with NVIDIA was priced into the markets. That prediction ended up being true, and on Thursday, as a result of NVIDIA's earnings reports, the markets did end up rallying. But the second catalyst didn't end up going quite in my favor like the first catalyst did. My second catalyst was basically thinking that a lot of bad news, a lot of hawkishness was being priced in to the Fed meeting, not an official Fed meeting, but a symposium that Jerome Powell was speaking at on Friday. Again, that ended up being wrong because the markets crashed 4% on Friday. And the reason I want to go back to this video briefly is because somebody left a very important comment. Joe P is his name, shout out to you. He said, not going to say anything negative as we now know what happened on Friday. This is just a reminder that no one can predict the stock market. Don't fight the Fed. We need another round of 75 basis points in September to level off the inflation. And yes, on this YouTube channel, we have had great success over the past couple of months predicting the stock market. And as a result of that, a lot of people have started following my channel and listening to every single word I have to say without doing their own research and coming up with their own conclusions and thoughts. And that is not a good thing because nobody can predict the stock market, especially me. I'm a 21-year-old speaking through a microphone to you guys watching this video on YouTube. Please do not take anything I say as financial advice, but in today's video, we are going to discuss why I think this sell-off on Friday was complete bullcrap. Jerome Powell ended up speaking for only 9 minutes on Friday morning. I actually live streamed this on my YouTube channel, and I was shocked how quick this speech went. And we can see that the speech started at 10 o'clock, and it ended at 10:09, which checks out the 9-minute time frame. And if we zoom in here to this point in the day, we can see that the initial reaction to Jerome Powell's speech was a huge green candle. At 10:09, we had this last super small red candle right here, but as soon as his speech ended, the markets literally rallied almost 1% in a single minute. 1% in a single minute. That is significant. But you can see quite easily that the rest of the day didn't end up following through with that initial reaction to Jerome Powell. And this is why I believe that this market crash on Friday was complete BS. I mean, things were literally shaping up for the markets across the spectrum to have an incredible green day. Within this singular minute following the conclusion of Jerome Powell's speech on Friday, where the NASDAQ went up almost 1% in 60 seconds, almost 1 million shares of the QQQ were traded. But you can see that things quickly faded here. In the minutes following, we had 300 and 400,000 volume candles moving to the downside. And throughout the rest of the day, the volume continued to fade and fade and fade. And by the end of the day, we only had 69 million shares of volume in the QQQ. And keep in mind, the average volume is 57 million. So yes, we were at above average volume, but for a day where the NASDAQ sold off by more than 4%, you would expect the volume on that day to be at least near double whatever the average volume is. And we were nowhere close to that. In fact, these 13 million shares of additional above average volume we got can probably be attributed solely to forced liquidations and forced selling. And this is why I believe Friday is going to end up being a huge bear trap, because this volume we got on a negative 4% day in the NASDAQ just is not indicative of a true sell-off. But these few things I've already laid out in this video are not the only things that were weird about Friday. We also had Treasury yields basically go unchanged. We can zoom in and look at the 2-year Treasury yield in particular because typically the 2-year Treasury yield reflects whatever the market's expectations are for where the federal funds rate is going to go over the relatively short term. If the federal funds rate is expected to go up more than previously expected, we would expect to see the Treasury yield also increase to match that expectation of the federal funds rate increasing. But on Friday, we can go back and look at this and see that the 2-year Treasury yield was virtually unchanged. In fact, the 2-year yield ended up closing nowhere near the high of the day. But this doesn't make sense. People say that the market sold off on Friday because we got an extremely hawkish Fed. But if we got an extremely hawkish Fed, we would have expected to see these Treasury yields rise as interest rate expectations increased across the spectrum. And there's a reason here that Treasury yields virtually went unchanged. And this data doesn't show it now because the yield in futures opened for tomorrow's day of trading, but no matter what yield you looked at, no matter what Treasury you looked at, the 3-month, the 1-year, the 2-year, the 5-year, 10-year, or 30-year, the yield on these Treasuries were all virtually unchanged, which again makes no sense if the true reason the market sold off on Friday was because we got an extremely hawkish Fed. If Powell was truly hawkish, we would have expected rates across the board to hit new highs, but that's not what we got. So there's something really wrong happening here. Somebody here is calling BS. So at this point in the video, knowing what we now know, you might be wondering, what the heck is going on? If the market sold off 4% on Friday, and it wasn't because of a hawkish Fed, then what was the real reason? And in my opinion, it breaks down to something quite simple. The markets, in my opinion, were simply looking for a reason to sell off. The markets don't just decide to sell off for no reason. They need some sort of catalyst to do so. And blaming the Fed or the speech that Jerome Powell had is a perfect scapegoat. Big money really doesn't have to do much to crash the markets 4% on a day where there's a huge catalyst like Jerome Powell speaking. All they have to do is crash the markets 1 to 2% following whatever catalyst it is, and that's enough to convince retail that it is time to sell off. Clearly, big money believes that this is negative, that the Fed came out as extremely hawkish, and I'm going to sell out of everything right now in hopes to beat the rest of the sell-off. And hopefully, I can come back in and buy those shares back lower. That's what retail did, and they played right into big money's hand, in my personal opinion. It's literally textbook what big money decided to do on Friday. With the huge green candlestick, getting retail investors to buy in, but then selling the market off and forcing those retail investors that chased to sell them their shares, to set stop limits. And guess what? The market sold off throughout the entire day. The markets ended the day basically at lows. Stop limits kept getting hit all day long. And guess what? It was big money and smart money that was buying up all of those shares on Friday. This was entirely a retail investor sell-off, in my personal opinion. And big money didn't have to do much at all to pull it off because of the importance of that Federal Reserve meeting or symposium, whatever they called it. You can ask anybody in my membership and in my Discord server, but I was confused throughout the entire day why the markets were selling off so significantly. But I figured it out over the weekend. It's really not that crazy. But the reason I was so confused is because we really didn't learn anything that we didn't already know about the Fed's plans to raise rates and keep rates relatively high for a sustained amount of time in order to be certain that inflation has fully been squashed. Over this weekend, I've gone back and re-listened to that short 9-minute speech. I went back and reread the transcript of that speech, and it still makes no sense. We did not learn anything we didn't learn about Jerome Powell's intentions in regards to interest rates and what he wants to do to squash inflation. So Powell was not more hawkish than the markets expected, and Treasury yields tell that story for me. Powell was just steady in his approach to fighting inflation. Again, we learned nothing new. His strategy remains the same. 1 month of inflation cooling off, we all knew that. It would not be enough for the Fed to flip and reverse course on raising rates. 1 month is not enough to make any decisions. We need back-to-back-to-back months of inflation cooling off before the Fed is going to reverse course and maybe stop raising rates, and then eventually in 2023 start to cut those rates. Now, if you're wondering what I believe the markets are going to do this week, obviously remember, I can get things wrong. I got it wrong on Friday, although I think it is complete bullcrap why the markets sold off. I got that wrong. I'm going to get things wrong in the future, but if you want my opinion on what's going to happen in the stock market this week, I would not be surprised at all to see a follow through with this sell-off on Monday and maybe even a little bit of Tuesday. But I do believe at some point in the week, we're going to quickly reverse course in the stock market. We're going to regain all of the ground we've lost on the indices, and we're going to really resume this rally. And again, I said that last week, and I was wrong. I didn't think big money was going to play games surrounding this Jerome Powell meeting, but it turns out they did. But with that, if you're new here or returning and not yet subscribed, I would greatly appreciate that subscribe button down below. Let me know down in the comment section what you think is going to happen this week. Do you think that sell-off on Friday was legitimate, or do you think it was kind of bullcrap like I think? Also, don't forget to hit the like button for me. It helps push my videos out to a broader audience. With that, stay blessed. Have a great rest of your day. I'll be back with a brand new video later this week. Peace out.